the market is as steady as they come, 100 points plus on the Nifty. It's been that way for the last couple of hours.
Okay, and yeah, you're right, actually. In fact, the market is doing so well that I think Prashant forgot to mic up. But yeah, so about 1% higher now on the frontline indices. It's a 100-point gain on the Nifty and about 340 on the Sensex.
Absolutely. So, I mean, and by the way, I mean, nothing has changed. So, IT is doing very well. Reliance, was doing well. I think that is still there. And of course, banks, not as well as they were doing at one point in time. I mean, but there is no big negative drag coming in there. So 0.5% or so the Nifty bank at this point in time. So that's basically how things are stacked up. The Nifty, by the way, is off 15-20 points from the day's high. But for the last, almost 3 hours now, it's been absolutely steady kind of trade coming through. I think we're getting European cues as well. The market should start trading somewhere.
Yeah, actually, the expectation is that the market would open just a tad bit higher. There's that crucial Brexit vote today. And it's like a make or break deal, actually, for Theresa May. So let's see. Ahead of that, the FTSE opens up about 0.25% higher. Yesterday as well, the UK markets did well. The French market opening up about 1% higher. But that remains to be the big cue to monitor for now. All right, and picking up pace as we speak. But first up, let's take you through our own top stories. The market jumps pulled up by strength in Reliance and Infosys. TCS and HDFC Bank also bad for the bulls. Mid-cap index higher, though lags behind the frontline peers.
As Power Discom losses and overdues mount, Power Secretary Ajay Kumar Bhalla says that a group of ministers is considering allowing power generators dues to be met through bill discounting by PFC, REC and banks, with a backstop coming in from state governments.
Economists expect the Reserve Bank to cut rates in 2019, led by a steady retail inflation print, but worry about mounting fiscal profligacy, especially of the states.
The rupee weakens above the 71 to the dollar mark to hit a one-month low. IT stocks are in top shape.
Yes Bank extends gains on reports that Deutsche Bank's Ranveer Gill leads the race to succeed Rana Kapoor. Also, Jet Airways is in the green, though off the day's high on hopes of an imminent resolution plan.
Ashwini is with us to take us through what he's making of things on the top of 1:30 as always. Ashwini, afternoon. So if you, we were talking at 11:30, you said, well, this move seems like it's worth chasing after. But if you chased it back then, you was right there, not really gone anywhere. Your sense now?
See, there is some chink in the armor which is appearing, which means that the financials have totally dropped out of the market rally, and inflation down, etc. All that is being ignored. Maybe they are preparing for some farm loan waiver or interest rates not coming off so easily. So that way, while Nifty is doing fine, 130 point move after a 500 point decline on Bank Nifty doesn't quite really cut it. So people should focus on the financials, because my sense is if financials start to give up, then the rally may not cross 10,900. Obviously, you want to be objective, so 10,770, to about 10,800, that remains a strong support. As long as that holds on, you should continue to hold your long positions. But financials, if you are long there, I think they would at best underperform. So don't be too long on financials. Having said that, individual stocks, you would have expected ICICI Bank to do well today, but again it's given up gains. So that is a sell with a stop of 375, target of 360. Canara Bank is a sell with a stop of 281, target of 268. And Oro Pharma is a buy with a stop of 775, target of 800.
Okay, but would you go on financials since they're not performing and can, in a way dropped out? Anything you can do on the other side, on the sell side?
See, basically you should try to do the sell side, once the market starts to turn, because if the entire market is higher, it becomes very difficult for one sector, whatever be the news, to come off. So maybe if we start breaking, say, 10,800, that would be the time when the bank nifty would have restarted its collapse. So, but overall, if you see, it's fairly clear that even PSU financials are not looking at inflation, and even there things are coming off. So it just means that from here Nifty outperforms and bank Nifty kind of lags behind. And once the Nifty turns around, the bank Nifty turns around harder.
All right, Ashwini, thanks very much for joining in with your trading ideas. Let's also focus on the global cues, and their markets are likely to keep a keen eye on the fate of Theresa May's Brexit deal in the British Parliament today. The UK Prime Minister looks set to head into a historic defeat, potentially leading to a no-confidence vote against her or the government. The defeat in Parliament today will open up several uncertainties, including the option of the United Kingdom leaving the European Union without a deal or a second referendum on Brexit itself. Jan Lamberts, Global Head of Financial Markets Research at Rabobank, now joins us on the telephone line. Hi, Jan. Thanks very much for speaking with us. What's your take on how Brexit looks to pan out, and therefore, which are the sort of markets that you would be looking at, and how would you also look at the sort of impact on EU itself?
No, it looks pretty much a certainty that today's meaningful vote will be defeated. The margin that is polling at the moment is by 200 votes. That would be historic, the biggest defeat for the government since 1924. It would be humiliation. Typically, you would expect the Prime Minister to step down. But Prime Minister May has shown remarkable resilience amidst humiliations. So we actually think she won't do that. There will be a no-confidence vote tabled by Jeremy Corbyn. From the Labour Party, it's probably likely the Tories will still unite against that. And even if they were to vote with him on that front, they probably wouldn't put him in the seat, in which case general elections would be triggered. The most immediate thing to watch after the defeat will be if Theresa May is giving a press conference, will be what she will talk about. And we suspect she's going to say she will go back to Europe with this defeat and ask them for concessions. And the main concessions she's going to ask for will be about the backstop on Northern Ireland, where there is no definitive end date. That's the key sticking point here at the moment. The problem is, of course, that has always been the most elusive part of the negotiations. So, and the EU has already said, Juncker and Tusk has even written a three-page letter about it recently, that they don't want to move on this. But we'll see. Deadlines are not deadlines in Europe, and red lines are not red lines either. So maybe a concession there is possible. That would majorly help.
Jan, with the vote being defeated, I mean, is the public opinion in Britain moving towards Remain? And if that is correct, is there any political mechanism to resolve the situation?
Starting with the last question, I think there are plenty of political mechanisms. I mean, if Brexit and the referendum on Brexit was the ultimate exercise of democracy, then surely you can have votes a couple of years down the road. Some people say, so you keep voting till you get the quotation marks right outcome. But that's, of course, nonsense. In democracies, people can change their minds, and there's no problem polling again. The appetite, though, away from that, amongst politicians seems to be very limited. It will be sold by many as a betrayal of the original intention of the vote, even though now a lot is more clear. But technically it's possible, and we can't rule out that at some point it will come back to the table, particularly if there is a new deal. Now, in terms of have a lot of people shifted their opinion? I think some have shifted their opinion. There is evidence that the split would be now slightly more in favor of Remain rather than Brexit, but I would not want to put my money too vigorously on it. I think still a lot of people think this is a good idea and want the government to come up with a deal. But of course, they want the type of deal that doesn't seem to be on the table. So then where does it, what happens next, essentially, is the question, because there is no parliamentary majority for any available outcome. Correct.
So there is no political legitimacy in that sense for either camp. I mean, so what is, it's uncharted territory.
You're going exactly to the core of it.
Yeah.
Yeah, you're going exactly to the core of it. The problem here, because a lot of people also say Europe is being very difficult. Well, the Europeans are playing the role of tough negotiators, just like the British are trying to be tough in their negotiations. I think that's fair sports. The real issue here is that in Britain, there is no majority for any option, seems, be that a hard Brexit, a no Brexit, a new referendum, and that is exactly the key issue. The one thing we can almost be certain of now, though, is that there will be a delay. The March 29 deadline is not a firm deadline. Europe has already sort of signaled that that can move, because if the alternative is a chaotic no-deal Brexit, then everyone wants to keep on talking. Unfortunately, we also know that simply having more time allows for more shenanigans, more politicking, rather than really a resolution of the issue at hand. The key issue remains Northern Ireland. The key issue remains the backstop and the definitive date to that. Now, you would think that Europe could help and give some clarification there, but this is seen as a betrayal of what Ireland wants. Republic of Ireland did once, and that is where the issue here lies. It's hard to fudge this. That's already been clear, but that's where the key negotiating effort will have to be.
You don't think there is absolutely any chance of a Brexit without any deal? A no-deal Brexit?
A no-deal Brexit. There is a chance of it, but we have to be a bit clear. A lot of people are presenting a no-deal Brexit as a sort of go-off-the-cliff type of situation. The way I look at it is, at the moment, if you look at 100% of the issues, and probably on 70, 75% of the issues, there is actually widespread agreement. Like, for example, Europeans working in Britain or British people working in Europe. There's absolutely no problem. But these type of things are all thrown into the bigger deal. Then there's 15% where there's actually been quite a bit of compromise, where people are a bit uncomfortable, but it will work. And then there's the 5%, like the backstop, Northern Ireland, where it doesn't work at the moment. That 5% is holding up the deal. If you were to have a no-deal Brexit, I'm convinced that 80% will still be agreed in smaller agreements that currently only seem possible the bigger agreement, but then can be taken apart and done separately. It's the other 20% that will be the problem. That'll hurt, but not nearly as much as or the image that suddenly you go off this cliff and there's absolutely nothing that can happen.
Just one last word. How was the vote will be defeated? Will markets sort of vote with their feet one way or the other? I mean, the pound's been quite strong in that sense. What's your sense in terms of the impact on financial markets, both currencies and equities?
Yeah, it's very binary in this case. And this has been funny because up until now it's been a fluid situation, but finally it is getting binary. If the market gets to whiff this is indeed a no-deal Brexit, and like I said, there's a very small chance of that, then it'll be very bad for the pound, very bad for equity markets. But if the markets feel that it's a mess, but there is a postponement or a new referendum coming, the referendum being the most positive option from the market side, but even the postponement is seen as positive, then you could actually see sterling rallying. And we saw sterling perform a number of times the past couple of weeks reasonably just when there was a whiff of that, with postponement or perhaps a referendum coming through. So it's really quite binary. Those are the two options you're looking at, and it's be as widespread as cable looking at either 120 or 140.
All right, Jan, thanks very much for joining in. We'll touch base with you in another few days and take stock of what's happening with the global space. Well, the market's near the highs of the day, so good going for now. Let's focus on some individual stocks. Yes Bank is amongst the top index gainers on the back of reports that Deutsche Bank's Ravneet Gill is currently leading the race to succeed Rana Kapoor as the MD and CEO. Abhishek Kothari is here to fill us in. Abhishek.
Sources tell CNBC TV18 that Ravneet Gill, that is the CEO of Deutsche Bank, is the #1 name in the list that has been given by the board to RBI. Now, there are two names that have been given in the order of hierarchy or preference that Yes Bank has, as to replace MD and CEO in terms of Rana Kapoor when he exits. So Ravneet Gill has led Deutsche Bank in India for 6 years and has over 30 years of experience across various banking verticals. Now, this candidature may get a swift, approval by RBI, given the fact that just 6 months back, RBI had renewed the term at Deutsche Bank for Ravneet Gill. Due diligence, therefore, may reduce and time won't be taken that much with RBI. So, Rajat Monga is the second candidate or the #2 name in the list, while Yes Bank has not responded to our story. Back to you.
Okay, the stock is still up about 4%, 204 nearly is where the stock is trading at. On to some macro perspective. Earlier today, we spoke with Sonal Verma of Nomura India and Sajid Chinoy of JP Morgan about the key macro concerns and their expectations from the RBI. Listen.
Core inflation will come off and the current persistently high core inflation we are seeing is a result of specific idiosyncratic factors and some lagged effect of past high prices pass-through still going on, but that's not going to be a sustainable scenario. Therefore, for February, we do think that there's still a decent probability of the RBI changing its stance back to neutral. Our base case view is that there will be a rate cut, but only in the third quarter of 2019. Growth is all right. Maybe there is a bit of a slowdown, but it's not as bad as the headlines suggest. But I think if I look at the incremental growth drivers and what they suggest for the growth outlook over the next 9 months, they're all moving negative. What does it mean for the growth outlook? I think output gap has closed is essentially a statement of where things stand in the past. Going forward, our view is that growth will actually head towards 6.5% by mid-2019, which means that output gap will actually start to widen again.
PMI surveys have held up at quite a high level. Bank credit growth has picked up very smartly and offset at least some, if not all, of the NBFC slowdown. The problem is if you look at year-on-year numbers over the next few months, we'll get a very deceptive impression of the economy, because this was the same time last year that we had the post-GST restocking. Growth picked up very sharply. We've always believed growth is not as weak as we think it is. Headline inflation, at least until September, August to September, looks like it's going to be below 4%. So if you're an MPC member going into this meeting, you've come into with two soft prints, the next 2 to 3 quarters look below 4%. My chance is we certainly get a change of stance in February, and we get a rate cut either in February or April.
Okay, 108 points. Welcome back. You're with us here on Mid-Cap Radar. 10,845 is where we stand at. One of the big numbers today is going to be Zee, which will report numbers later in the day. Mangalam is here with a quick check. The stock's been actually performing pretty poorly, weak over the last many trading sessions. Today, ahead of the numbers, it is up about 2% or so. It promises to be a very interesting set, and the commentary will be important as well. Mangalam, over to you.
Well, the stock is higher in today's trading session, but over the last few months, Zee has underperformed the markets, and that's for a couple of reasons. The first one, during the quarter, there was a spate of downgrades coming in from a lot of brokerages, be it Kotak, Bank of America, Merrill Lynch, or Morgan Stanley. And the second one was the big news that the company's promoters intend to pair half of their stake in the company or get in a global partner. So those were the key highlights that were on top of the investors as well as the street's mind ahead of numbers today. So in terms of numbers, the street is working with a 15% growth on Zee's top line. The EBITDA is likely to grow higher than the top line, leading to a margin expansion. So we have a 20% growth on the EBITDA. 712 crores is what the company is likely to post, and margins of close to 33.7%. Keep an eye out on the net profit. 440 odd crores is what our poll throws up. However, in terms of the components, we'll have to watch out for ad revenue growth. 15 to 17% is on the cards. Domestic subscription growth 16 to 18%. More than the numbers, the management's commentary on investment in Z5, as well as the update on the intended stake sale plan by the promoters, is something that the street will be watching out for.
Okay, Mangalam, thanks very much. And of course, we'll get the numbers. We'll get an opportunity to speak with the management as well later this evening. It's a wrap here on this edition of Mid-Cap Radar. From Sumaira, me, everyone on the team, thank you for watching. And we leave with the news that the market's up 110 points, slowly inching right back to the day's high.